Eric Muathe with Muathe.com with part 1 of this weekend's market analysis video. I'm recording this with about 1 hour since the market opened. The Dow has been up about 125 points at the highs of the day. Let's take a look at the charts, see what we see intraday, so you can kind of make your decisions as you go along towards the end of this week. So this is going to be a slightly brief video as opposed to the last weekend's video, which was a little bit on the lengthy side, because I want to rush this to you before the market continues trading here, because I think there's something I need to share with you so that we can probably not be chasing this current open where the market was trading with the Dow higher, at least at the highs close to 120 plus points. I'll show you why on the chart. Anyway, so on the weekly for the Nasdaq, this is a 2-year weekly. We can see that it came back to test this line. We saw this possibility as of last weekend. So the bounce this week is consistent with some of the things we were seeing. So that's good enough. We take a look at the Nasdaq 3-year weekly. And there's another line that we are also watching that has come in play. And the market also has gone on to respond to that line, going back to the highs of 2014. We've been watching this line because this is where the market broke out or moved above the resistance line at the beginning of 2017. Since then, market's been coming back to test that line and successfully moving back to new all-time highs on the Nasdaq. And right now we are seeing the Nasdaq doing the same thing. So we know that as long as it is back above that line, chances are we can expect the market to test the highs, if not break above the highs. So based on the weekly chart, that is the indication. Now if we take a look at the daily for the Nasdaq, we now see that the line we had drawn last Friday held. In other words, it looked like the market was coming back to form a double bottom support. Keep in mind, this is also a small positive divergence because we went slightly lower in price, but the RSI had a slight improvement. Again, that is positive divergence. So this week's recovery is consistent again with that support line. Keep in mind, if you missed last weekend's video, which was subscribers only, take a look at this line going back to this breakout here. So we moved above this range at the beginning of 2016. Actually it was February. So this RSI breakout brings us off those lows. Market goes on a nice run to all-time high territory. So we know this was a critical period here where the RSI broke out. So what we can do is just take that information and draw our support line, and we can just do it like that. So at the end of last weekend, or at the end of last week, we had actually seen the possibility that the market might actually be coming back to test this level, and that was, the market confirmed that that was correct analysis. Double bottom support on that line. Now this line has been support going back to February of 2016. Every time the market's been bouncing on this line with uniform activity, we have either a recovery or at least a swing trade. For the most part, the recoveries have led to fresh all-time highs. We touched that line here of those lows right there, and here we are seeing good double bottom support. So this week's recovery is consistent with that. Now there's another line, and this line goes back to the lows of August, I believe, August of 2015. We just draw it like that. So it connects the lows here, here, and the recent double bottom support here and here. All right, so we had multiple lines coming to show potential support. So this week's bounce is not a surprise. Now, one thing I want to point out here is, as we trade intraday, is we need to watch the Nasdaq. If it can hold above 50, then that's good for a recovery move. In other words, the daily move might stick, but I'll show you if it fails to hold above RSI 50, that might not be a good sign. Now let's take a look at the reason why at the beginning of the video I was saying let's not chase this current intraday move, and I'll show you the reason why. So to understand this, the best way I can show this is there was a previous resistance line here. Now once the market broke out above this level here, we had a nice run. Market would go on to record fresh all-time highs on the Nasdaq. And then we get this reversal. On a reversal day, intraday, if you recall that day, market was trading higher and just changed direction and closed lower, substantially lower that day. So if you extend the blue line, what you actually get is interesting data points. So extend it. It should be something like that. And what you get here is you get the break here, which is this high. You get resistance with uniform activity here, which is that intraday high precisely, and we get this resistance, which is this intraday high, and this is the Nasdaq hourly chart, and I'm using RSI setting of 26 just so that you understand where the chart's coming from. And you can see intraday the Nasdaq has already come off the highs within the first hour. Why? Because we've tagged that same level and we seem to be responding to it again. And that's why at the beginning of the video I was saying let's not chase this intraday move until the market can find a way of moving above the resistance line. Hope that makes sense. Now let's take a look at the Dow. And for the Dow, if you take the lows on the weekly, and this is 2-year weekly chart, you draw it something like that. You get the lows from here, this double bottom, through this low with uniform action. You see that right now on the weekly, this is good support. This is exactly what the bulls want to see. Next, what the bulls want to see is the Dow reclaiming the level above 69.1. As you can see, staying above 69.1 has been very good for bulls. If you consider that we moved above 69.1 on the weekly RSI here, we held and had a nice run until it moved back below that 69.1 threshold somewhere here, which was good enough for this period here. Again, we see that the market did do the same thing. We move above 69.1 right there. We stay above it until recently when the market moved below it, which is this period right there. And again, that was good enough for this stretch where the market had a nice run to all-time highs. So definitely the bulls would want the market to move the weekly RSI back above 69.1. Take a look at the Dow, and we can see that the Dow did find good support, if not perfect support, back above its 50-day moving average. That's a sign of a healthy market. We also saw that at the end of last week, we had come back to test this line. It's a simple line connecting recent RSI lows going back to September of last year. All these have been good support levels for the market, either good for a recovery or for a swing trade higher. And now we see that this is where it came to test that line, and we held right there. So good support there. Now, if you take a look at the hourly, to keep it simple, I'll show you one line on the Dow hourly, and again RSI setting of 26, as you can see right there. Now, just like we saw with the Nasdaq, you can draw a line connecting the previous highs. Should be something like that. And what this gives you is some areas where the market moved higher. We come back and break below that line of those highs. Rejection here of that intraday high. Rejection here of, I believe, either Thursday's highs or Wednesday's highs, and now as of Friday morning it is hitting that line. As long as that line is resistance, we can expect that the market stalls around current levels in the early Friday morning trading. But wait, there is more. The same chart has another line here. So this line was the break right there of that high. We extend that line and we see that it is coming in play even in the current market. Do it like that. It's kind of hard to see because of the many lines there, but there's resistance here of that high, resistance there, the same high right there, and now intraday resistance here right there. So the Dow coming off the highs just makes sense. And right now, as I record this, I'm seeing the market already respond to those levels. Remember, the Dow was up 120 points at the open. Looks like the hourly charts I'm talking about here are stalling it. We'll see where it closes. Now take a look at the Dow 30-minute chart. And on the Dow 30-minute, we can have two lines. You got your top side resistance line coming in play at the highs of early Friday morning trading. We hit that line. This was the previous resistance of that high, and here we got double top resistance of that high right there. There's also another way we can look at this, is to take a look at the previous break line. So you have to go here, extend it out like that, and what it gives you is this break of that drop. You moved back below the line during this gap down, resistance here of that same high, and intraday at the highs we hit that level, and now the market is showing signs of pulling back. That's why I'm saying let's not chase this pre-morning move. Let's wait and see what the market is trying to do. Let's take a look at the S&P 500. And here we can take a look at the 3-year weekly, just like we saw with the Nasdaq. And we have that line that goes back to the 2014 highs on the weekly. It's a simple line that we've been watching for many weeks. And we just draw it like that. And what this line gives you is a breakout. In fact, let me draw that a little bit better. So give me a second. So let's do this, connecting this high here, something like that. And just like we saw with the Nasdaq, breakout, that's the entry there, support off the lows of late December, so back again, testing the line it held during these lows, and now it actually even held here during those lows, and now it wants to move back above the line. If the S&P 500 can hold above that line, that's good. But now that it is trading slightly below the line, we have to be careful, because if this becomes resistance, then that's something different. It's something the market hasn't done since late 2016. So movement back above the blue line is a positive for the market. Failure to move back above the blue line is a negative. And that is still playing out even as I record this. I hope that makes some sense. If we take a look at the S&P 500 and go to the daily, what we see is, now number one, early in the session I believe we were trading close to 50. Now the fact that we went above 50 but now we are back below it generally means the market doesn't have the strength. All right, also take a look at this line here. Now what I'm going to do is extend that line. So this was the previous support line, and we can argue, or I can argue, or anybody can argue, that there's a potential for that this is now becoming resistance for the market. Yes, it was support here for the lows there, support here of those lows, and then we came and broke below the line, that break, which is this movement. We tried to move above the line, we were rejected, It was also RSI 50 rejection with uniform activity off those highs. And now we are back to test this line. The more we fail to hold above this line, the more this market looks like it is preparing to go down. If we can recapture back above that blue line, then the market is still potentially able to move higher. Now there's another way of simplifying this. If we are trading above the RSI, blah, blah, blah. All right, let me start again. If we are trading above the 50-day moving average, good. If we are trading below it, then this market is starting to change its makeup. So it's a simple distinction. Above the 50-day, market is okay to stable. Below the 50-day, visually, things are not acting as powerfully as they should. But I think it's best if I explain something here, which is, I believe, important. Is again, like we saw with the Nasdaq, keep in mind, we already found support last week. So we saw that potential for support. So the movement higher this week was consistent with that analysis. Keep in mind, this comes from this entry on the RSI of the lows there. If you're new to this concept, I call it the uniformity concept. It's my own uniformity. It's my own original concept. You can look for a link in the description of the video that goes into details about this. But what this is saying is every time you have uniform activity bounce on a major line that was critical, we know this was a major low because the market went on to record a fantastic run since February of 2016. And so hence why I call it uniformity. Anytime you have uniform activity bounce, the market will have a swing trade or a recovery. Below the line, back above it with uniform action of those lows. Support with uniform action of the lows there. Support with uniform action of the lows there. And over the past 1 or 2 weeks, double bottom support, that's uniform action. Hence the lows recently there. All right. So we know that the Dow could still come back and test this line, show some form of uniform activity, and the market will still be good. So even if you're bearish, I think you should be a little bit concerned about the market still coming back to test the line. That line might still hold. The market might still be in an uptrend. Even as I record this, even though we are coming off the highs, the Dow's lost half the gains it had prior in the open. But the market has yet to break down because, like I'm saying here, if the market is truly to get in a major funk, in other words, if we are going to see a huge drop, which is potentially, it's possible, anything is possible, right? Two things have to happen. We have to break the blue line, which has been support since February 2016. And then secondly, we would have to break this RSI lows line. Those two things have to happen before we can have the idea that the market, so we have to break these two lines if this type of a scenario is to take place of a major drop. If the market can find support on these two lines, ultimately we are still within a good bullish uptrend. Let's take a look at the S&P 500 and take a look at the 30-minute chart. But let's begin with the hourly first. The hourly chart, take a look at the RSI topside resistance. At the highs of the day, we hit that level right there. The market came off the highs. Now, the morning gap up and a nice move in the morning was because we moved above RSI 50. Where as you move above RSI 50, you have a good reaction higher. Now, the next question is hour to hour. If we crack below RSI 50, expect another big down hour. The exact opposite, which is potentially what we are seeing right now with the market coming off the highs. Again, if you're not aware about this concept, which I call the RSI crossing phenomena, take a look for a link in the description of the video. I should have a link explaining the RSI cross phenomena. All right, RSI 50 crossing phenomena. Take a look at the hourly, at the 30-minute chart for the S&P 500. And the 30-minute chart has a similar line. It's actually very well defined. If you have the RSI setting of 26, you could see this happening even beforehand. Right there, that is resistance. Until the market clears this line, we cannot go chasing the market. We have to wait for movement above the line before we can be aggressive buyers of the market. So right now, we have to hold the market suspect until it breaks above this line. All the arrows here show where we have resistance on this line, and as of early morning, it hit that level and pulled back. Now let me show you the 5 minute, and the 5 minute has a simple line. If you take this break off that high there was a break and a gap down, right? All you do is extend that same line. Whoops, I'll draw it different, like that. Let me draw it a little different. All right, bear with me. And what this gives you is the break. Oops. That break during that gap down, double top rejection during that intraday high. At the highs of this morning session, we hit that line which is off that high. There's also, now we can see that on the 5 minute, the market had come back to test the break line. So that break brings the market off the highs a couple days ago, I believe last week. And what we are doing essentially is testing that break at the open. Again, this is the uniformity principle I'm talking about, this time giving us a sell signal intraday. Hence why I was recording this video when I was recording it, because I could see that about to happen. Anyway, all right, let's summarize this. We gotta be very careful to assume that the market is dead. Because until we break those daily support lines, this market is still sideways to bullish. So that's the conclusion. We are still in a sideways to bullish market until we break the daily support lines that I discussed in this video, and I showed that on the Nasdaq and the S&P 500. Now there's also another major point. As long as S&P 500, just like it did for 2 years here, as long as the S&P 500 continues to hold above RSI level of 69.1, this market is yet again saying that it is still sideways to bullish until some of those things break. The RSI on the monthly would have to move below 69.1. S&P 500 daily would have to break those two lines. And to be clear, the two lines, one more time. Line number one is the RSI lows going back to 2015. This line would have to break if the market is to get into a major correction or even start a major bear market. Number two, we can see that this was the entry of the RSI in 2016, early 2016. So the market would also have to break below this blue line, which over the last 2 weeks gave us good support. So the only way we can entertain strong bearish arguments is if and when the market moves below these two lines, and if and when the S&P 500 comes off RSI 69.1 on its monthly RSI. So for now, let's not chase this market intraday. We might find buying opportunities after this pullback takes place and we see the next intraday signal to go along. So that's my conclusion for now. By the way, I should have part 2 ready potentially before Monday's trading. Sometime it's earlier, just depends on when I get done with part 2. Part 2 is only for subscribers, by the way. And those of you who are watching this who are not subscribers, from time to time I shall be making part 1 also only exclusively for subscribers as a thank you for their business and loyalty. Otherwise, this is Eric Muathe with Muathe.com. Enjoy your weekend. As always, good luck, peace, and blessings. E, a C, S, and so it is. Mwah.